An asset's carrying amount exceeds its recoverable amount. How much is my carrying amount? 480. Whereas recoverable amount, how much? 425. Then how much is my impairment loss? 480 minus 425. That is 55. Is 55, right? 480 minus 425. 55. And this is the impairment loss. And this need to be taken to P&L as debit. You have a doubt? Should be recognized as an asset when it's probable that future economic benefits associated with the asset will flow to the enterprise exceeding 1 year. You should put that word. Please make a note and adjust that. The cost of the asset can be measured reliably. Property, plant and equipment initially measured at cost, obviously. Cost is the amount of cash paid or the fair value of the other consideration given to acquire an asset. Sometimes I buy this chair, I give this table. The cost of the chair will be the amount that I forego in giving the table. Subsequent expenditure should be capitalized only when it is probable that the future economic benefits will flow to the enterprise in excess of the originally assessed standard of performance. You understand that? Now, I have this room, no AC, assume like this. And some students come into class here. And I reconfigured the room, or I have done renovation. I put on ACs and then I started marketing a fully equipped with AC room for classes. Then previously 10 students, now 40 students. Pardon? Yeah, Wi-Fi also, yes. Free Wi-Fi and so many other benefits. So the student number increases, so the economic benefits are substantially more. So therefore, that additional expenditure will resulting into enhance your economic result will have to be capitalized. So that is what the subsequent expenditure we talked about. Expenditure that is extended useful life, increase capacity, substantially improve output quality, or enable substantial reduction in operating cost generally should be capitalized. All other expenditures should be expensed. Incurred, example, expenditure on repairs and maintenance, like we talked about color wash, the paint in the building. Carrying amount after initial recognition, benchmark. Property, plant and please also, we no more using the term benchmark. That's like old practice, but we written here just to know. But benchmark, the term standard is no more using. Standard is saying we prefer this method, and we also have other methods that is allowed for you to use. Property, plant and equipment should be measured at cost less accumulated depreciation and any accumulated impairment loss. Property, plant and equipment should be revalued to its fair value less any subsequent accumulated depreciation and accumulated impairment loss. Revaluation to fair value should be regularly revised on a regular intervals. The fair value of the asset at the date of revaluation, the fair value, the amount at which an asset could be exchanged between knowledgeable willing parties in an arm's length transaction. This is connected to internet. What happened? Screenshot, or if you want to take a picture, or you want to write, or whatever you want. See, they also talk about receiving an asset or paid to transfer a liability. Actually, this is a pretty old definition. Two alternative treatments may be restated proportionately so that now I discussed in very detail about the way you deal with revaluation. So I'm not going to read this screen. This is important. If you happen to do a revaluation, you had to revalue the entire class of assets. Let's say under building, you are building in Wakra, building in Ain Khalid, building in Mansoura. You are now revaluing only the lucrative property in Wakra, not the property that is under severe concern in Ain Khalid. So what will be the result? You will have a revaluation gain there, and then you be silent here so that the net result is good. It is not allowed. If you are deciding to revalue, you got to revalue the entire class of assets. Reverse revaluation decrease, the revaluation should be recognized as income to the extent of the amount recognized as an expense. We discussed that. It is not permitted to offset a revaluation decrease on an asset against a revaluation surplus of another asset. Two different assets, two different results. You are not allowed to offset and show the rosy picture only to the user. When the carrying amount is decreased, the decrease should be charged to expense, to the P&L account. However, if there is a related revaluation surplus, the decrease should be charged directly against with this, the excess charge to the income statement, that only applies to individual assets. These all we discussed. Depreciable amount, straight line method, diminishing balance method, sum of the units of production method. Should be reviewed. Depreciation method should be reviewed on a regular basis also. Like at the beginning, I thought I will use straight line method. After 3 years, I realized no, it is now best is reducing balance method. Then you should change it. Now, talking about accounting policy and accounting estimate, there is two terms here. Give me that. No problem. No, I will manage. It's okay. With regard to depreciation, we have accounting estimate and accounting policy. Let's say I have an asset. And I believe depreciation rate is 20%. Is there any meter or a barcode reader or a scanner? Go and touch that asset, it tells you, kick, 20%. Is it something like this? No. It's an estimate that is done by whom? Management. So, the life of the asset is what the percentage, right? How many years here? If I use straight line method, 5 years. So, I am estimating 5 years of life for this asset. So, the useful economic lifetime becomes the estimate. So, lifetime or the percentage of depreciation. Whereas, you choose straight line method or reducing balance method. This selecting one of these is the management choice, and that becomes the accounting method of depreciation. Okay. Now, if you think previously my life of the asset is 5 years, now I believe no, it is 10 years. So you are thinking to change the estimate. You are thinking to change the estimate. On another scenario, you also thinking to change the method of depreciation. How standard deals with this? If you want to change the estimate, this is not a change in accounting policy. This is not a change in accounting policy. There is also two another terms. Tell me whether you all know this or don't know. One is something called prospective. Other one is retrospective. Your tongue might slip. Be careful when you're reading this. Retrospective. One is prospective, other one is retrospective. If there is a change in the accounting estimate, you got to do only the change on a prospective basis, meaning the current year and any future years. Whereas, if you are changing the accounting policy, IAS 8 tells you, you got to do this on a retrospective basis. Now, what do you mean by this? Let's say, I have an asset I purchased on 1 January 2018. I purchased the asset on 2018. Now we are on 31st December 2020. How many years finished? 18 full, 19 full, 20 full. 3 years. So we finished 3 years. Now we assume that asset's life here 5. 3 years over. Now we decide, no, asset life total 10. Now what is the remaining life of the asset? 7. So now when you calculate in depreciation, you have to use 7 and you are accounting for 2021. When you do the 2021, you should base your depreciation calculation based on 7 years. That is changing in accounting estimate on a prospective basis, future. But on the other hand, we calculate depreciation using straight line method here. Now, when I reach here, I suddenly decide, no, I should change it to reducing balance method. This is a change in accounting policy. When there is a change in accounting policy, you got to do the retrospective basis. What do you mean by that? If you do the reducing balance method for the very first year, what will be your depreciation? Let's say, for example, 20,000 is my cost of the asset. Every year depreciation, for example, 2,000 for the year 1, year 2 and year 3. Now, if I calculate depreciation using reducing balance method, first year 2,000, second year 1,750, third year 1,500, just for the sake of example. Now, what you do now, you take the total of these 3. How much? 2, 3,750, 4,750, 5,250, right? Correct? And whereas, how much is total here? Then I have a difference of 750. You have to change this. Now, this already depreciation done and dusted. It's in the past. Can I adjust to the current year financial? I can't do anything in my current year profit and loss account. What you have to do is, you have to adjust this in your retained earnings. And this exercise is known as prior year adjustment. This prior adjustment is because on retrospective basis. As if I will do the depreciation on reducing balance method for every single year which is already done or gone, I have to use that. You have to perform a prior year adjustment. Clear? Actually, accounting is an